You're saying certain types of controversial weapons are not in your ESG fund, and also I guess you're not mandated to hold or to have exposure to. On the surface, I understand what you're saying, even though for many other companies, including U.S. defense contractors, war, unfortunately, is good business for them. But by excluding some of these companies, the flip side would be then you are not able to assist in a situation like, say, Ukraine, no?
Yeah.
Where they need military assistance.
Yeah, no, it's a difficult decision at times on when you think about global conflicts and defense is a key need and where do you draw a line. So what we have taken a call is defense on a broad basis is a very controversial area from an ESG investment perspective. And within that, small firearms, civilian arms, weapons of mass destruction are clearly very negative from our investment philosophy perspective. So what we have taken a conscious call is at this point of time, given that many of these businesses in India and globally are intermingled, and there is no fine line between what they are doing, we are going to stay away from defense companies, broadly speaking, in our exposure. At the same time, we appreciate that global geopolitical situation is warranting that defense expenditures are going up, and there is very conscious defense-related expenditure which are likely to be elevated in the very near term. But from our perspective, we are looking at beyond that short-term challenge of geopolitical tension and looking at a longer-term scenario where other themes are more relevant from our investment horizon perspective.
And Nitin, coal, I would imagine, is off limits for this fund as well, yes?
Yes, so wherever there is a significant dependence on coal as a feedstock or production of coal in the underlying business, we are not looking to invest in those businesses. We do appreciate that many of the existing coal utilities are changing their capital allocation towards renewables, but that journey is going to be long drawn out. We also appreciate that in India, there is a rising energy need, and in the rising energy need, both coal, which is a conventional way of energy sources in India, and renewable will play their part. We are looking to promote or back up the companies which are engaged in renewables. Maybe if we go into hydrogen chain, we will look at that options in our portfolio. But if the current business or the future business is looking to be significantly dependent on coal and coal-related businesses, that is not going to be part of our investment universe.